Hello and welcome to the Weekly Forex Outlook at xm.com. In the spotlight next week will be the ECB and BoC decisions, along with CPI data out of the UK and Canada, as well as GDP figures out of China and the US retail sales report. I'm Maria Bashardis, and joining me to discuss all this is lead market analyst Rafi Boyadjian. So Rafi, let's begin with the central bank meetings coming up. The ECB will meet on Thursday, and there has been some talk of a pause in April. Yet the economic outlook has deteriorated recently as markets have had to grapple with Trump's tariff policies. Do you think the ECB will end up cutting rates this time? And what reaction might we see in the euro?
Well, Maria, like you said, there has been some talk of a pause in April, and this is because we've seen several back-to-back rate cuts already from the ECB, and there was basically signs that maybe the eurozone economic slowdown is stabilizing, and then on top of that we got that stimulus announcement from Germany. So that all of that took the urgency away from the ECB to continue cutting rates aggressively. However, since the last meeting, we have seen these escalations in the trade war. Trump, of course, has now basically said that the reciprocal tariffs is going to be delayed for 90 days. Nevertheless, the outlook is pretty uncertain right now for Eurozone businesses. And let's not forget the fact that we still have the 20% tariffs on car imports into the US, which means European car exports are going to be struggling. So we're probably now going to be getting a 25 basis point rate cut once again out of the ECB. Nevertheless, we've seen the euro perform rather well against the US dollar, even as we saw investors repricing the rate cut bets for the ECB April meeting. And this is because, the eurozone economy does have a significant current account surplus. So now as we're in the middle of a trade war, that potentially provides the euro with some kind of safe haven attributes. And of course, there's now concerns about the US economy as well. So if we do get this rate cut from the ECB, there's probably not going to be a huge impact on the euro itself. But unless, of course, Christine Lagarde, the ECB president, does sound very worried about the Eurozone growth outlook and we get a very dovish response, in which case we may see the euro come under pressure.
Turning to the Bank of Canada now, policymakers will announce a rate decision on Wednesday. A day before that, on Tuesday, the CPI report will come out. Given the ongoing trade tensions with the US, what might we see in these Canadian inflation figures? And do you think the BoC may decide to cut rates again?
So we have seen a bit of a pickup in Canadian inflation, in fact. And of course, Canada has imposed some counter tariffs against the US. So we may potentially see a further rise in Canadian inflation. But the growth outlook is, of course, like most other countries, it's kind of uncertain right now as we've got this trade war going on. On the bright side of things, the US has basically provided Canada with some reprieve. A lot of Canadian exports to the US are now excluded from the 25% tariffs, at least those which fall under the USMCA agreement. And the two sides may reach further agreement. So there is a chance that at least between Canada and the US, trade tensions may de-escalate. But of course, in the meantime, it's likely to cause some economic damage. So there's about a 40% chance that the Bank of Canada will cut interest rates again. But of course, the other 60% means that investors expect the BoC to stay on hold. And we did hear from the minutes of the previous meeting, which, by the way, that last meeting when they did cut rates by 25 basis points, it was a close call. And we got from the minutes that, in fact, had it not been for the new tariffs that the US imposed, that the Bank of Canada would have stayed on hold at its previous meeting. I think they're probably going to stay on hold for the time being, but if they do decide to cut, that shouldn't be totally unexpected. Nevertheless, the Canadian dollar might come under some pressure, but on the whole, the loonie seems to be doing rather well against the US dollar as concerns grow about the US economy. The dollar has been sliding across the board, and so whether or not it's going to have a rate cut by the BoC would have a huge impact on loonie. Maybe not too much, and the Canadian dollar might be able to hold on to its recent gains.
Now, we'll also get CPI data out of the UK. What should traders look out for, and what reactions might we get in the pound?
So yeah, this is kind of interesting when it comes to the pound and the Bank of England, because kind of similar to the Fed, investors weren't expecting too many rate cuts from the Bank of England before this trade war escalated. And now all of a sudden we're seeing investors kind of become more worried about the UK economic outlook. They're pricing in more rate cuts, and there's a good chance the Bank of England will cut rates at its next meeting in May. However, inflation does remain a bit of a problem in the UK. The Bank of England expects inflation to rise in the months ahead. So if we do see a stronger than expected CPI data, then that might potentially raise some doubts about a May rate cut by the Bank of England, and that may provide the pound with a bit of a support, because the pound has had a bit of a mixed performance during this turbulent time for financial markets, as investors on the one hand, we've seen the dollar come under pressure, but on the other hand, they've been pricing in additional rate cuts for the Bank of England. So I think the data will be important, and it could well shape expectations, and the pound will probably respond accordingly.
Turning to China now, the GDP estimate will be released on Wednesday, which comes in the midst of escalating trade tensions with the US. What are we expecting to see from this data, and how might it affect China's next moves?
So China has been basically the exception, where the White House hasn't basically delayed the reciprocal tariffs. In fact, tariffs against China have only been going up in the past week or two, and we've just had the announcement that China has announced counter tariffs against the 125% tariffs that the US has imposed. So China is now also charging 125% tariffs on US imports. And so this is basically raising alarm bells for both the Chinese and US economies, because of course the two largest economies in the world do rely on each other for a significant portion of their trade. And what impact would this have, not just on their own economies, but the rest of the world as well? And so basically this means that the GDP data that we're going to be getting might not have a huge impact, might not have a significant bearing on the markets, because it is for the first quarter. What matters now is how Chinese economy will perform in the second quarter and onwards. So if we were to get stronger than expected GDP numbers, markets might really not pay much attention to it, and what's going to be the real focus is any developments, whether the two sides are going to perhaps back down or start negotiations, and I think that's going to be more important for risk sentiment than the GDP data. But of course, if we were to get disappointing GDP numbers, that might potentially raise expectations or hopes of more stimulus measures being announced by China, and that might actually be somewhat positive for risk appetite.
And finally, in the US, we'll get retail sales figures on Wednesday. How important will this data be given all the tariff noise? And what should dollar traders keep their eyes on?
So data will be important in the sense that there's some concerns about consumption in the US, and of course this is a big chunk of the US economic growth. Last month we saw retail sales rising by just 0.2%. We may well see a rebound of 1.3% for the month of March, and that might well be positive for both the dollar and US equities, because it would basically mean a reduced chance of a US recession. But on the whole, I think investors' attention will be on any updates on the trade front, whether the US and China will start to perhaps start talking to each other rather than keep on raising this tit-for-tat tariffs that we're seeing, and whether there's going to be an update in terms of the trade negotiations that are currently underway with individual countries that have been charged reciprocal tariffs. So I think the trade headlines will probably continue to dominate as far as the dollar is concerned. At the moment, the dollar, of course, is struggling. Let's see whether or not it's going to be able to rebound in the coming days.
Rafi, thanks so much. This was the Weekly Forex Outlook here at XM.com.